For more on this week's big tech earnings, we're joined right now by Brent Thill. He is a senior analyst for technology at Jefferies. He's here to talk about Facebook, and actually he's here to talk about Microsoft. And on Facebook is Mark Mahaney. He's lead internet analyst at RBC Capital Markets. Mark, let's start with you since we just had this conversation about Facebook. What'd you think of the numbers yesterday? Are you actually concerned about the increasing expenses, or were things a little better than you thought?
Let's see. I thought at the margin things were a little bit disappointing. We were expecting deceleration. We got slightly greater deceleration than expected. The expense items were largely in line. There was a one-time legal expense that negatively surprised people. But other than that, we did bring down our numbers a little bit. Near term, we're a little less constructive. I still like Facebook as a play. As we go through 2020, they should be a major derivative off of the surge, the increased acceleration we'll see in global advertising because of the U.S. elections, because of the Olympics. We still think they've got these very large growth catalysts out there in terms of WhatsApp monetization and commerce activity on Instagram. So we like the asset. But yeah, near term, we were disappointed. We brought numbers down. Our price target still shows material upside from here, so we'll stick with the stock. You're sticking with your $270 price target, even though you took your earnings numbers down? No, we did. We took our price target down to 255 from 270. Okay. And just on valuation, we've got an asset now that's trading at around 18 times next year's earnings, 16 times if you adjust for cash. For an asset like this with 40% margins and 25% revenue growth, I think that's highly attractive.
Brent, you would have seemed that the bar was pretty high for Microsoft, given how the stock has performed and kind of the love it's been getting from the analyst community. And yet the results seem like it's encouraged further buying. We're going to stretch to new highs at the open here. What are you seeing right now in terms of the business and then the valuation perhaps getting stretched to the upside?
The business is doing phenomenal. The old business, the perpetual on-premise business, is cycling at the same speed as the cloud business. And so what you have are two incredible assets and companies, the unique value proposition that Microsoft's bringing, which is hybrid. Both Google and Amazon can't offer that, and they're seeing really great strength. They're seeing move to premium workloads, which are higher ASP products, and that's driving in their largest business, Intelligent Cloud, a 27% growth rate. I mean, this company's on a $140 billion run rate, growing double digits. It's absolutely incredible, the numbers. I've covered the company for close to 2 decades. I don't think we've seen numbers like this. There's a massive acceleration across many of their businesses, even at the run rate they're at, which suggests they're taking market share from Oracle, IBM, everyone else in the industry. And they're also growing their margins. So they committed to 200 basis points of margin improvement. So I think everyone keeps checking the numbers to see if they're right, and the momentum's there, and that goes against the hybrid value prop that they're bringing. Yes, the stock's stretched. It's had a huge move. But again, when you look at the fundamentals that they're delivering, again, their largest business growing 27% is absolutely staggering.
And you mentioned taking market share from the likes of Oracle and IBM. In terms of the cloud business, is there a read-through on Amazon?
I think that it's a two-horse race at the high end. It's really both those companies. If you add Google and Microsoft combined in just infrastructure, Amazon's about $15 billion ahead. So we're not worried for Amazon. Everywhere we turn, everyone's committing to AWS. I think a lot of the large companies are committing to both Amazon and Microsoft is a dual cloud provider. And so there's a seat at the table for both right now. The question is, can Google get in? Right now, again, the market's so big, those three vendors can thrive. The others are all losing.
Microsoft's been incredible with the numbers that they put out quarter after quarter. Mark, let's go back to Facebook very quickly. Julia brought up this point that Zuckerberg kind of seemed to indicate last night that this is one company. It's completely intertwined. The back operations are together of all these different apps, that it's be difficult to split up. A, do you think that would dissuade regulators? And B, how serious of a threat is there for regulators to break up Facebook? I was a little surprised to hear him actually even address it last night.
Yeah, I've been saying for a while, I think we're at peak reg. I don't think Facebook will get broken up. I think that's a very hard pitch to make. Those assets, especially Instagram, has been part of the business for, a good solid 7 years. I think that'd be almost unprecedented to break that up. So I think that's highly unlikely. You are going to have more regulation, but just put it in context. You've already had material regulation introduced against Facebook and Google. That was GDPR last year, a year and a half ago in Europe, and then the California Consumer Protection Act. That's gone into effect earlier this year. That's what's kind of dimming the ad targeting capabilities for Facebook. But by the way, it will for every internet platform. And the advantage at the end of the day, and why we think the ROI to advertisers is going to be intact for Facebook, is the scale, the reach, and the frequency that they offer. There's only two platforms that offer at that kind of scale, reach, and frequency. It's Google and it's Facebook. So I think ad dollars are going to continue to go to those two platforms. I don't think we're going to see greater regulatory risk than we already see.
Brent, very quickly, I know you liked what you saw with Microsoft. You were thinking that maybe that stock gets to $175, and sure enough, it's almost there this morning in the trade. Do you think that could technically push it higher? You think you have conviction with where it stands right now?
We raised our price target to 195. Stock's going higher.